Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for our Australian Rare Earths and Critical Minerals Conference. Our next presentation of the day is from Tungsten Mining. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I am very pleased to welcome Gary Lyons, Non-Executive Chairman of Tungsten Mining, which trades on the OTCQB venture market under the symbol TGNMF and on ASX under the symbol TGN. Welcome, Gary.
Thank you, Lily, and good morning, everybody. Welcome to Tungsten Mining. I look forward to sharing and highlighting the key aspects of our recently delivered Mount Mulgine scoping study. It was released to the market on the 6th of November, so it's a little less than 2 weeks old. The study highlighted the global significance of the Mount Mulgine project, and in particular, the incredible financial outcomes that it delivers, and which I am delighted to share with you today. This is the usual disclaimer which needs to be shown. However, I won't dwell on it. I can assure you that its contents are not unusual, and in fact, are typical disclosure protocols. In terms of our corporate snapshot, the company has just on 1 billion shares on issue. Our last traded price was 9.4 cents US at close yesterday, the 18th. Our market capitalization is 98 million, also as of yesterday, and our cash balance is some 7 million US. Apologies for the Australian dollar remark there. Why invest in tungsten? What we've seen in recent times has been rocketing prices to all-time highs, particularly the last 12 months. Looking at the chart in the bottom right hand, you'll see that back in 2020, the tungsten concentrate price was approximately $200 US per MTU, and MTU is the equivalent of 22.2 pounds. Today, the price has skyrocketed to some $689 US per 22.2 pounds or per MTU. So significant upside that equates to almost $70,000 US per ton. Tungsten was added to the critical minerals export restriction list by China and the Soviet Union, by Russia, in February of this year. And that's created a deepening supply deficit, the geopolitical tailwinds that's being created with China controlling some 80% of tungsten concentrate production and Russia a further 10%. Back in 2020, when prices were at a low of around $200, it was a disincentivized further investment into new tungsten assets. So we've seen very little new supply being contemplated, let alone come on stream. Current demand is around 90,000 tons per annum globally, and the compound annual growth rate for tungsten is around 7.8% per annum for the next 8 years. I'm not so sure that I support the theory that we'll see a doubling of demand in terms of tons, but I am certain that the demand for tungsten is increasing. Our concern is where the new supply will come from. What we're seeing is supply moving off as mines are being depleted in the Western world, and it's created this deepening supply deficit. In terms of usage for tungsten, the obvious one that people refer to is defense. It only accounts for about 8% of tungsten demand globally. But transport industries, mineral and construction, earth moving, industrial uses are other big users, as well as pharmaceutical and consumer durables, and indeed energy. Put in simple terms, without tungsten, aeroplanes don't fly. Without tungsten, motor cars don't get driven. And without tungsten, your partner's birthday present doesn't get delivered by Amazon. This slide depicts some of the larger global tungsten assets found in the Western world outside of China. The red highlighted assets are those that belong to tungsten mining and rank as globally important. The two largest assets are Canadian-based, so they're large tons, and indeed Mactung in Canada is of a very good grade, whilst the other Canadian asset is extremely low grade and likely to be uneconomic. The largest asset, the Mactung asset, is held by Fireweed Metals, that's listed on NASDAQ as well as the TSX. And they are in a development mode. They put funding aside to advance the development of the Mactung asset, but they themselves predict that they're some 5 to 7 years away from production. Our projects sit in combined. We have 3 projects in Australia, which I'll introduce you to. They sit collectively as ranked number 3. Some of the others that may well be known to you, ranked 8th is Nguy Phao. That's a Vietnamese asset owned by Masan Resources. This particular asset has been the largest producer outside of China, accounting for around 9,000 tons of production of tungsten concentrate per annum. Their resource has been depleted, and their forecast for 2026 is that their production will fall, and it'll fall significantly to around 2,500 tons, creating a further void or deficit of approximately 7,000 tons per annum. Rank 12 is Sandong. Sandong is a South Korean asset that's held by a group called Almonty Industries. Almonty is listed on the NASDAQ, as well as the ASX and TSX. It has a market capitalization of approximately 2.6 billion at this juncture. Sandong itself is anticipated to commence production in 2026, although we understand there are some environmental issues that might hold that back. But it is our firm belief that they will be in production in 2026. Apologies for the bubble chart on the left. There seems to be a large congregation there. But I'll cover this in a little more detail as we move on. So these are tungsten mining's assets. We have 3 in Australia. They are all open cut. None of them are underground. In far north Queensland, we have the Watershed project, which had a defined feasibility study completed back in 2014. And that was done at a price of $400 per 22.2 pounds. In the centre of Australia, in the Northern Territory, a place called Hatches Creek, we have a project. It's somewhat smaller, but was operated during the First and Second World War for munition supplies. In the left-hand side portion of the map of Australia sits Western Australia and Mount Mulgine. Mount Mulgine is where our largest asset lies. It is globally significant. It sits in a Tier 1 mining jurisdiction that is 330 kilometres north-northeast of the state's capital of Perth, and approximately 150 miles inland from a deep-sea port of Geraldton, directly east or due east of Geraldton. We've invested significant amounts in this asset since we've begun exploring it some 9 years ago. We've completed more than 370,000 feet of drilling. And if our exploration department got their way, they'd be continuing to drill. But the message has clearly been sent out to them to leave some of the resource in the ground so that at some point in time we can mine it. So not only is Mount Mulgine large, it's what we term as being a polymetallic deposit. It doesn't just contain one critical mineral in the tungsten, it contains 2. The second one is molybdenum. The polymetallic nature is that it also hosts copper, gold, and silver. so a number of base metals to boot. So the results of the scoping study, if we start to have a look at some of the financial metrics, our initial startup development case is for 6 million tonnes of processing per annum. It'll be long life, low cost, and high value. We'll commence at 6 million tonnes, but our aim is, and always has been, to move quite quickly to large-scale production, which is pitched at 15 million tonnes per annum. I mentioned the polymetallic nature of the deposit at Mulgine, and the pricing that's been adopted for this NPV and for this scoping study, what we term as being base prices, which are considerably lower than the current cost prices. And I'll explain those, and I'll show you that differential through the course of the presentation. So if we turn our attention to the grey tab in the center of the screen, CapEx for the 6 million tonne per annum project will range between 233 and 322 million US dollars. This is a range that's based upon a conservative and an aggressive approach. Conservative means a higher cost. Aggressively, where we're looking to trim the capital expenditure, would be the 233. So in relation to that and relative to that, the NPV, which is discounted at 8%, it'll use the same references. So at the top of that tab, the NPV ranges from 0.65 of a billion US dollars to 0.91 billion US dollars. So the aggressive rate being $233 million investment in CapEx will deliver 910 million US dollar NPV. And of course, the more conservative would be 650 million US. That's at base prices, as I referenced. If we were to adopt the spot prices of those commodities, then that range would be between 1.56 billion NPV and 1.82 billion. And the IRR using base metal prices would be 30 to 45%, using spot prices 51 to 71%. In terms of operating costs, the range for those are $16.50 US to $20 per tonne of ore. In terms of cash flow across the life of mine, and this is post-tax basis, would range from 1.29 billion US dollars to 1.66 billion, an annual free cash life of mine, again post-tax, will range between 67 million and 83 million. An incredibly short payback period of between 2.2 and 3.8 years from the commencement of production. A very low strip ratio, which means that at 0.8 to 1, which means that, that essentially every tonne that we're mining is being processed. Adopting the 6 million tonne per annum development case gives us a 23-year mine life at that rate. The next slide is not a repeat of that slide. It's just showing the financial metrics that are delivered by a 15-tonne per annum operation. Again, using the same references. The CapEx in this case would be aggressive 410 million US and conservative 564 million. And adopting that delivers an NPV at base commodity prices of 1.1 to 1.5 billion, and at spot prices 2.5 to 2.9 billion dollar NPV using the spot prices. The RRR, the rate of return based on the base prices, is 42 to 62, and the spot price is a massive 69 to 93% return. Operating costs, of course, fall due to economies of scale and volume, down to 14 to 17 US dollars per tonne. In terms of cash flow, total cash flow life of mine, 1.39 billion to 1.77 billion, and annual free cash flow ranging from 179 to 221 million. And an incredibly short payback period of some 1.6 to 2.2 years from the commencement of production. Again, the strip ratio doesn't change, but mine life based on 15 million tonnes per annum reduces to some 10 years. Just excuse me a second. This slide depicts our resources. If I could turn your attention to the bottom part of the chart, our global resources total a massive 328 million tonnes. That contains some 383,000 tonnes of tungsten concentrate, which at today's price in ground is some $35 billion in the tungsten concentrate alone. Molybdenum, we have some 70,000 tonnes, a little over 1 million ounces of gold, 44 million ounces of silver, and some 125,000 tonnes of copper. That's our global resources. If we look at the top part of the chart, this references purely Mulgine, what we refer to as Mulgine Trench. Remembering this is one massive pit, and it contains some 247 million tonnes of resource, and so, of that, 270,000 tonnes of the tungsten concentrate is contained in Mulgine Trench, and just about all of the rest of the metals that make up that polymetallic resource are hosted in that deposit. So you can see it is a massive, massive deposit. We refer to it as being bigger than the state of Texas. In terms of production, annual production of metals, you can see a little under 1,200 tonnes of molybdenum is produced per annum, 1,300 tonnes of copper, a little more than 4,500 tonnes of tungsten concentrate, around 9,600 tonnes, 600 ounces of gold, I wish it was tonnes, and a little over 500,000 ounces of silver. The bottom right-hand pic depicts the 3 stages of our Mulgine Trench pit. Stage 1 being approximately 30 million tonnes, stage 2 a further 30 million tonnes, and then stage 3 is some 76 million tonnes, totaling 136 million tonnes. The maximum depth of our pit in the centre would be some 250 metres. And the exploration upside that I've referenced is that at both ends and at depth, all drilling remained in mineralisation. So we're about to announce an exploration target to expand that already incredibly large resource holding that we have at Mulgine Trench, and that announcement will be released in the coming days. This is our flow sheet. It's conventional. It's rather simple. It starts with a 3-stage crushing process on the left-hand side, moving right into a primary gravity concentration, and then into sulfide flotation, where the pyrites, the copper, gold, silver, and molybdenum will head north and be floated out, whilst the tungsten product will sink to the bottom of the bulk sulfide flotation, move through a magnetic separation, which actually delivers another product, which is a byproduct. It's actually in the form of iron ore. It's a magnetite iron ore that's extremely high grade, in the high 60%. From there, the tungsten product will move into a secondary gravity separation, which is the black square in the center, and then on to what's referred to as scheelite flotation. And then it'll move into a scheelite concentration in the green box there. So we'll produce 3 products effectively: a tungsten concentrate, a tungsten scheelite concentrate, that is, a molybdenum concentrate, and then a copper, gold, and silver concentrate. In terms of recoveries, we're able to liberate 72.5% of the tungsten, some 70% of the molybdenum, 41% of gold, 47% of silver, and 62% of the copper. In terms of our site and infrastructure, we will use gas-fired power generation and the addition of renewable energy resources. And there is the potential for a solar microgrid solution too. Water, we need water, roughly 2.4 to 3.6 gigalitres per annum at the 6 million tonne processing capacity. And we'll derive that water from fractured rock and paleochannel systems within the region. And then there are some, it'll be supplemented by other regional basin systems in close proximity. In terms of transport and logistics, I mentioned we're approximately 155 miles due east of the port of Geraldton and within driving distance. The value of our product, roughly a 20-foot ocean-going container, a 20-foot FCL, has a value of about $2 million US. And we anticipate that we'll move one of those to the port of Geraldton each day of the week, so seven per week. In terms of the workforce, there's a small resource available to us in local townships close to the tenements, the assets. And then we'll use DIDO or drive-in, drive-out for our American friends from that city and the port of Geraldton, and then fly-in, fly-outs from the capital city of Perth. This depicts our site layout and some of the infrastructure. It's pretty simple, and I'll keep it simple. The pink oval shape in the top left is our Mulgine trench pit that sits at that 150 million tonnes that I mentioned. Due south of that is the plant infrastructure, and further south, the round component there is the tailings dam, which initially is 60 million tonnes. And due east of there is the accommodation, the camp for housing the workforce. Opportunity exists to leverage off existing infrastructure in the region, such as airstrips and accommodation. And we anticipate that during construction, we'll take full advantage of some of those temporary facilities. This proves or supports the cost profile and provides a little more detail surrounding some of the financial inputs. The capex there is for that base case, the 233 to 322 million US. Some of the financial inputs you haven't been introduced to yet are the discount rate you have at 8%. The company tax rate here is 30%. There'll be a capital waste expense in the first year only of 30%. We've adopted a foreign exchange rate of $1 Australian equals 65 cents US throughout this entire study. And the government take a royalty of some 5%. I'll then draw your attention to the bottom right-hand corner of this slide, which shows the base commodity prices that we adopted for our scoping study. Tungsten, you'll see, was $425 US for that per MTU or per 22.2 pounds. And today, you may recall from an earlier slide, the current rate is some $689 US per MTU. Molybdenum, $23 a pound. Gold, $3,100 US per ounce. Silver, $38.50 an ounce. And copper, $4.60 per pound. This actually shows the variance that's delivered from the base prices and the spot prices. So the two columns there, the red component at the base outlines the initial NPV, the conservative and aggressive. You'll recall at 652 million and 920 million more aggressive. That's the lower capex. The blue section at the top of the column, that is the difference between the base metal prices and the spot prices. And you can see just how significant that range is, and just how conservative we've been in pricing and developing the scoping study. To the right-hand side, you'll see the spot prices that we've used. Apologies, the tungsten one's now a little old. It was the 23rd of October in this particular slide. It is $6.89. Molybdenum is $25.30, not a significant cushion. Gold is significant. There's $1,000 difference between the base price and indeed the spot price. Silver, there's quite a margin there, and only a small margin between base and spot prices for copper. Here's another way of showing the cash flow. Apologies for the colors, they're a bit close, but at the bottom of this chart, you'll see the base prices result in $1.7 billion of cash flow. And then the section at the top, the pinkish section, is what the spot prices deliver in addition, is another $1.5 billion for a total of $3.2 billion in cash flow. So extremely strong cash flow. The bottom left-hand corner depicts the payback, 2.2 years from commencement of production if we adopt the base prices, and indeed a payback of 1.3 years if we use current spot. A bit of a sensitivity analysis, but before I get to that, the pie chart on the left-hand side shows where our revenue stream comes from. 58% of our revenue is generated from tungsten, 19% from molybdenum, so that's 77% from those two critical minerals. And then the base metal concentrate of copper, gold, and silver is responsible for some 23% of our revenue. In the right-hand side is the sensitivity analysis. You can see that quite simply, it is sensitive to the FX rate, to Forex, also to the tungsten recovery and, of course, the tungsten price. What it isn't sensitive to is movements in capital cost or indeed mining operations, which is very, very pleasing to us. Some opportunities, the resource growth I've mentioned, an announcement will be coming out shortly in regards to that potential. We have the ability to optimize our current processing flow sheet and indeed to optimize some of our mining processes. I mentioned the magnetite potential that exists that's extracted through magnetic separation during the process. The infrastructure strategies, I think I've covered those. Commercially, we're being contacted almost daily, but at least weekly, from different offtake partners looking to secure offtake. And it will become one of our focuses. We've not dealt with our offtake at all, and it is significant. And indeed, looking at targeting project support from governments, both local in terms of state, federal, and also from US government. So engaging with Department of War and Energy amongst others. Here is our development timeline. And if we start in the left, scoping study Q3 of 2025, that's now almost 2 weeks old. The pre-feasibility study has been fast-tracked. We commenced that actually before we completed the scoping study, once we started to realize just what the financial outcomes really were. So we'll finish that by Q2 of 26. And we'll move directly into the DFS, the defined feasibility study, which will complete Q3 of 27. And then we'll move into FID. And then transition into engineering, procurement, and construction in Q1 of 2028. And we'll commence pre-production mining somewhere between Q3 and Q4 of 2028. Production is anticipated to commence in the second semester of 2029. And we have incentivized our entire workforce to fast track this and bring it forward at all cost. Some of our upcoming catalysts, announcements, I've included 2 or 3 that we have achieved in recent times. They're the ones on the left with the ticks. The scoping study, commencement of the PFS. We listed on the OTCQB around 3 weeks ago. We've appointed US brokers and lobbyists and advisors. We'll shortly release that resource exploration target I've mentioned. Engaging with the offtake partners and strategic and technical partners will commence at the beginning of 26, as will critical minerals offices of both the US and Australia. Completion of the Mount Mulgine PFS I've mentioned. Potential NASDAQ listing, it's been well formed part of our agenda to list on the NASDAQ exchange. And we're pitching that for Q3 26, even though I think we could potentially fast track that or bring it forward to Q2. It's pitched for Q3 26. Then commencement of the Mulgine DFS and completion of the DFS and final investment decision at the end of 2027. And this is where you can really see the value when comparing us, tungsten mining, to our peers. And I've elected to use two listed entities that are in production. One I mentioned, Almonty, which is listed on the NASDAQ. They have a contained reserve tons of tungsten concentrate of approximately 51,500 tons. And their EV reserve, and I apologize, this is still listed in Australian dollars, but I've converted it and I'll just look at my note. The EV is some $36,263 US per ton of tungsten concentrate in reserve. EQ Resources are producing in Europe as well as small scale in Australia. They have some 33,800 tons of tungsten concentrate in reserve. And their EV is some $4,093 US per ton. Tungsten mining, a massive portfolio of almost 180,000 tons of tungsten concentrate in reserve, and an EV, little old EV, of some 267 US dollars. So I think you can see the opportunity and the value uplift that tungsten mining offers, very clear. Our board, a well-experienced board that's currently being reviewed, but some of our board members sit across a number of listed entities. Some have got tungsten experience and steel making experience, and they're a well-seasoned, well-credentialed board that's well-known throughout Australia. And that's me. I thank you very much indeed for listening to the tungsten mining story. I hope you subscribe to it. It's been a pleasure delivering this to you, and I'd be delighted to answer any questions there may be if any time is left.